Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Selan exploration for a stock that has come in with a lot of queries, and that's why I thought that I'll explain this sector as well as this stock in detail. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Selan exploration. It was established in 1985 and they provide oil exploration services to major clients like ONGC, Reliance, etc. They have top clients in their bracket and they provide actually rigs and you could say rigging facilities to these companies to take out oil from wells, say the Bombay High, etc., wherever the well is located. Major player, it is a major player in drilling and excavation processes across India. So the major competitor would be Aban Offshore, but Selan has global offshore as well. But Selan has its own unique way of getting into the market, and they have clients which are big in nature. They have a very good dividend yield at the moment at over 3%, and a market cap of 200 crores is what Selan is standing at the moment. Looking at the numbers for FY20 versus FY19, the sales have dropped by more than 9% year on year, whereas the PAT number has been bad as well, down 40%. It is a very low debt company, nearing to its really being a debt free company, but very low debt, and this is very heartening. In terms of a company, the sector in which it is trading at the moment, because the sector itself is in a very, you can say, capital intensive business. So to have a company with very low debt is very commendable. A return on equity is of over 8% and operating profit margin is pretty good at 44%. But you need to take into consideration that they don't have many loans or receivables in that manner, and that's why the OPM is at a higher level. So why the stock is down, or what is the reason for the disappointment in the stock? First of all, global industrial slowdown. So they have businesses abroad as well, and due to the slowdown globally, there is not much of excavation and rigging, or you can say exploration projects that are taking place in the Middle East, especially where oil exploration is very big, and also in many parts of US and Europe, because of the economic slowdown, companies as well as countries are not putting in money into excavation into oil because the demand has slowed down for oil. So on both the sides, both on the supply side and on the demand side, there is an issue with OPEC reducing oil production, as well as there is very less demand globally of oil at the moment because of the growth slowdown that is taking place in many parts of the world. The domestic growth slowdown is another reason. The growth has slumped to around 4%, 4.5%. GDP growth is absolutely atrocious at the moment because they changed the GDP, you can say, evaluation process about 3 years back or so, 3 4 years back. The current BJP government, because if we take the earlier way of calculating GDP, you could say that we are at below 3% range, around 2.5% GDP growth, which is nearing to recession, and that's why companies such as Aban Offshore, Global Offshore, and Selan Exploration are not doing well because of the growth slowdown. The factories, industries are shutting down. We have seen what happened with Ashok Leyland, with shutting down of many you can say the units, and what is happening with the textile division, the paper industry, etc. And that is why there is lesser demand, because if factories doesn't work on 100% or 80 to 90% capacity, then there will be a very less demand of oil, because that is the real raw material of running the factory, etc., because of the lower electricity spread in India. So the many generators that are used and so on and so forth. So diesel and oil is used a lot, and oil is also a major component of raw material in many industries like paints and abrasives, etc. So if these industries, small scale industry, doesn't do well, then there is a huge compulsion or huge you can say setback for companies which are exploring oil. So this oil ancillary company would not do well. So this kind of slowdown in India has also hurt the company, and that's why the profitability has dropped, because the order book has really slumped. Maintenance cost is high. So we have seen that to maintain the rigs and the offshore businesses, you have to have working capital, you have to have some amount of cash in your books, and that is used continuously, even if it is even if the machinery is not used for the business to full capacity. So that's where the industry is hurting. The order book is shrinking. And one more thing about this is the more of an investor point of view. The promoter holding is down at 30%, and that is also doesn't go well with the investors, that with such a good dividend yield, still the promoter holding is low, because promoter would also be getting the dividends. So these are the reasons why the stock is not performing, and it is down more than 50-55%. If you look at the technicals, then the 200 DMA of the company stands at 160 rupees, and it looks very weak on charts at the moment, and we could see levels of 100, on the stock very soon, because I don't see any big move in the stock on the charts. And if you look at the 3-month chart and all, then you'll see that really once it gets past, you can say 150, 155 only, then the big move will come in. It looks very weak, and 130, is a strong support, but when it gets broken, then we could see even 80 levels in the stock coming in. So that's why even on the technical basis, even on the short term basis, I would say it is an avoid. So, what is my call? My call in this sector itself is to avoid. This sector was in demand between 2003 and 2007. Why was that? This was because at that point of time, it was all companies with debt, companies with leverage that were doing well. Companies into real estate, infrastructure, capital goods were doing well. Oil was at 100, $140 per barrel. Companies like Aban Offshore, Selan, Global Offshore were getting a lot of orders in order to excavate, in order to do drilling, and offshore businesses was running very high. The shipping business was high. There was a lot of transportation and a lot of people coming into India and going abroad on shipping trips and all that, so on and so forth. The goods and services were coming in and going out. So the business was running. The growth was at around 8% on the previous GDP calculation numbers, which you could say is around 9.5 to 10% of current levels, which currently stands at around 4%. So from 9% to 4%, you could see the slump in the GDP, and that is the reason why these companies would not do well. So wait for change on the ground. Do not see I do not see fast recovery in this sector soon. So avoid it. Rather buy into cash rich businesses, which bring in cash continuously, like FMCG, consumer goods businesses, or anything that is related to consumers, anything that is related to consumer discretionary, like even autos are good, rather than putting money into offshore businesses or drilling companies at the moment. And even if you put in money, put in only 5% of your total investment, so that you don't lose a lot if your call goes wrong. So this was my video on Selan exploration. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.